Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Lunar Classic, taking a look at what's been going on most recently, what we think is going to happen next and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. And if you are looking for a little bit more from the crypto space, why not check out the Patreon services in the description down below. Okay, let's get into this, right? Lunar Classic paired up with BUSD on the 1 hourly chart, and Binance is the data source. Following on from the last video that we did here on Lunar Classic, we are moving nicely in a direction as we spoke about. Obviously, nothing moves in straight lines, and unfortunately, some people are really impatient, and they look at these little kind of moves to the upside and think that we're going to the moon. Obviously, that isn't what goes on here. Nothing moves in straight lines. We have to be patient, and things do take time, right? So even you have all of these kind of movements to the upside here, they are short-lived and they reverse on you, right? And so one of the things that we're seeing here, and although a lot of people will see this as a bearish kind of thing, it's not necessarily. Basically, you have a series of lower highs, okay, and lower or higher. Let me just come and bring this down here. Some lower lows, right, just down at the bottom here, okay. And obviously these things they make people feel kind of nervous about the space, but actually this is actually reasonably positive. When you start to see these higher lows and lower highs, essentially what this tends to mean is that you end up with this potential break to the upside as you kind of run out of momentum to the downside. And so when we actually take a look at this from an Elliott wave theory point of view, we're obviously talking about this 27428 area that's down at the bottom here. This hasn't changed right in here, and essentially what we're looking at is almost at that target. Now, just to kind of put clarification out there, the minimum expectations have been met, right? We don't have to go down any further. It's not a requirement that we come all the way down to this dash line. It's just a probability that we are likely to come down, maybe even a little bit further than this area. Okay, it's all about probability. And so when we take a look at this and we start saying, okay, we've got ourselves some lower highs and some lower lows, all in this kind of range here. And of course, this is going to, in my opinion, break to the upside once we complete this structured move to the downside. Okay, so this is a short-term move to the downside with a potential move to the upside afterwards. Okay, and we're talking about this B wave at the top there. So let's talk about this in a little bit more detail, right? So we have this kind of structure coming down here, and if I go ahead and grab a fib, we can see quite clearly we bounced from this area up to here, right? So if I go ahead and move this, put this fib on here, move this to the bounce, you get confirmation of this area right here. Okay, and if we go ahead and we grab this and we grab this and we move this over to here, we can see that this comes down to an area that we've already kind of gone past. Now, the area on the 1-to-1 with our sub count, that first Fibonacci retracement here at 27428, comes in line with the 1.382 from this bigger macro. Okay, we want to avoid going down to 26305. That's the 1.618 down here. We want to avoid that because that will put us into a really bearish situation. So we know our fib numbers are all kind of lining up quite nicely. This being a 1-to-1 with this little move here, 1, 2, and 3 like that. Okay, and that there would be a 1.382 out of our bigger move. Okay, so like I said, we don't have to come down here. Our minimum expectations on our bigger ABC structure, this one here, have already been met. In theory, this should have stopped somewhere around here, okay, but we've overextended coming down. Okay, now what we do is we throw up our RSI and our stochastic RSI. Now, these are two relative strength indexes, okay, and they are used for different things. Okay, so the first one that we want to talk about is the stochastic RSI. I use this one all the time. It's more powerful, in my opinion, than the regular relative strength index. This basically is more sensitive to price movements, which means you can use this when the price is choppy, going sideways, and it is not in a trend. Okay, this is really useful. It helps us understand when we're overbought, when we're going to go down to oversold, and these things. Basically, you don't sell at the top and you don't buy at the bottom. That would be bad. That's not really what these tools are for. This tool is telling you the strength of a pump to the upside or the strength of a dump to the downside. That's what this tool does, and it's also what the RSI does. So when we take a look at the stochastic, we can actually get a good idea as to why we're reversing at these levels, right? We went from oversold here to overbought here. Basically, that area there was a really weak pump. And the stochastic RSI showed you this by moving rapidly from the oversold to the overbought area. That means that by the time you actually got to this point here, if you went long at the bottom, and by the time you got to this point, you could have seen actually, yeah, this is probably not a good place to be. We could probably come out of our positions because the stochastic RSI was telling us that actually you had lost momentum at this point. You had not set a new higher high. You're going down into these lower highs, for example. Then essentially that is not a good place to be, right? So here on our stochastic, that tells us that. Now the RSI, on the other hand, the RSI is good for a trend. When you're trending, the RSI is going to be your friend and it's going to help you understand what's going on. As you can see, these things are basically the opposites, right? We can see down here that the RSI is not as sensitive to price movements, which means it moved up during this entire movement here, but it wasn't overbought, right? And therefore you might think, we've got plenty of room to grow, right, on the RSI. The stochastic RSI, not so much. This one tells you a little bit more about what's going on right now. So this one here is more of a trend. Use this one on your longer time frames. Now, we put this one on here because I was looking for divergences. Now, one of the things with this RSI that not a lot of people know about is under the inputs, there's a source, okay? And by default, it's set to close. Now, if I put this back to its default state, and I go ahead and grab a trend line, this low just over here and this low over here, I'll just move that out of the way, these two low points, they're actually showing us a divergence. Okay, so we have this one over here at 29.07 and this one over here at 29.22. These two numbers are going up. Okay, now why is that important? It's fractionally, but it is there. It's important because your price is setting lower lows. Okay, so what we've got here is a divergence. You've basically lost momentum while setting a new lower low. This tells us that there is a high probability of reversal. Okay, however, as I said, some people don't know about the RSI and its settings. If I come back in here, this is basically using the closed positions of your candles. Okay, so basically it's only looking at the closed positions. What we really want to do is we want to take a look at all the wicks and all of the bodies of the candles. So we want to get an average of the price range within a single candle. And you can't do that from here at source. So if I come in here and I change this up to the OHLC4 and I click OK, this actually now changes this. It changes the positioning of our RSI line to be in the average of the candle, not just the closed position of the candle. Okay, this means it takes into consideration all of the wicks, which in my analysis is very important. The price went there after all, right? Now, down at the bottom here, what has that done? Well, that's changed these numbers. It's now 25.31 and 24.17, which means this is not a divergence. Okay, actually, we've gained momentum while setting a new lower low. So if we take it from different kind of perspectives, we would have an interesting kind of take on it. Now, Elliott wave theory obviously telling us that we're coming down here. This is kind of the obvious area that we're looking for. The stochastic RSI is saying we're probably going to have some momentum to the downside. There's no divergence that I can see here on the RSI under those settings, taking the average position. So essentially, I think, yeah, we are going to break to the upside. I do think that is likely to happen, but I think first of all, we have to complete this move to the downside first. Okay, once done, then we can talk about the next move to the upside, which will be up here. And if I zoom out, you can kind of get the idea of what is going on. This is going to be a big push to the upside. This might just be another bit of a blip in the middle here. We go up, down, up, hit this kind of 47044, and then maybe pull back down into the range of around 12526. So there's a lot of things to think about. I want to kind of scare people by thinking about, and one of the things about this structure here, guys, is it's corrective. There is nothing about this that's scary. This, if we zoom out, is actually a positive. Okay, you take the short-term pain for long-term gain. Okay, the last thing you want to do is kind of keep it artificially inflated for a while, because then the pain that comes later is going to be very, very significant. Okay, so think about the long term, not the short term. Okay, 3 waves up, 3 big waves coming down means another 3 big waves going up. Okay, we don't want to necessarily to kind of bring this all the way back down here because we were greedy up front and we we're just trying to pump the price for whatever reason, right? Essentially, what we want to do is want to keep this in good structure, good form, and then we'll get good results. If we start losing form and we start making it sloppy, then things are going to get ugly later down the line. So we want it to be as best as we possibly can if we're invested in Lunar Classic. So for the most part, that's kind of my short-term price price prediction on Lunar Classic. I do think we have to come down to 27428, and then I do think we're going to have to move up into this higher range of somewhere in the 41458. 41458, somewhere in that kind of range. So I do think there's a lot of growth in this, but you know, at the moment, brace ourselves for a little bit of pain before we have those gains. Guys, I'm going to leave the video right there. If you found it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Until the next one, guys, have a fantastic day.